Hello and welcome to the ISE ETF and Index Outlook for November 5th, 2012. This is Patrick Sresna. As always, we start off a chart of the S&P 500 using that Spider Exchange Traded Fund symbol SPY, and we had the S&P attempt a substantial rally on its jobs numbers, but Friday, as the end of the day approached, it had a substantial material reversal on the downside. This puts the S&P in a pretty difficult situation going into the U.S. elections. At this stage, this rising flag formation here that we kind of marked off with those two blue lines came right up to its retracement zones, and there is now vulnerability and risk to the downside that could see moves even as low as the 135 to 138 levels on the downside before we see a meaningful bottom. The question is, will the market do this during the elections? It's more than likely what we may see is a few days of far more range-bound price action, and traders will use the results of the election as the stimulus to start the next momentum push in the markets. At this stage, with the way that reversal occurred and what level that reversal occurred at, we do favor that the market still has yet to weaken one more time. Overall, we do believe that this isn't the beginning of a new bear market, but rather this is just a meaningful 5 to 10% market correction. So even though we are anticipating it to move lower, we do believe that that will be a buying opportunity to accumulate the market. Next here, I want to take a look at the ISE Water Index, which is a symbol HHO, and the Water Index has done a far better job holding up than the broader markets. The overhead resistance at the 98.50 focal point has rejected the market each time. With the way that the selling is, it's very natural for us to see the Water Index trade right back to the bottom end of its ranges. But if in this sideways range-bound price action of the last 2 months, if the price actions contained within here, this will be a midpoint consolidation for what could be another substantial bullish push in the water index into the end of the year. But at this juncture, we could still see weakness down toward that 95 level down below, but more than likely that might be a buy on dip. Next year, I want to take a look at the ISE Global Engineering Construction Index, which is symbol CVL, and this index continues to weaken a little bit lower down to its key support lines around the 232 area. Really at this stage, what we're looking at is to see where the key supports come in on this construction index. While we do believe that while the markets are consolidating, that there is risk of, let's say, another 5 to even 7-8 points on the downside of this index, but so long as the bulls contain the selling to just modest little pullbacks, then that this will also emerge as a buy on dip opportunity for correct about our outlook on the S&P. Finally, I want to take a look at the ISE Global Wind Index, which is a symbol GWE, and this index has actually made much clearer patterns. Again, while we do think that there is room for some further weakness of, let's say, 2-3 points on the downside during the next little waves of selling, we do believe that this is a flag or wedge consolidation lowered toward its support lines, and as it finds those supports with the broader markets, then the wind index will likely to emerge as a buying opportunity on the dip. That was your ISE ETF and Index Outlook. Thank you for joining us.